If you've been following Ultima Markets daily updates, you've likely noticed this strange but serious situation brewing in Japan. Supermarket rice shelves in Tokyo are either empty or plastered with signs limiting purchases to 1 bag per customer. Why? Because rice prices have surged, nearly doubling in the past year, hitting a 30-year high. Some Japanese families have been forced to eat less rice, turning instead to noodles and pasta. As locals put it, rice is becoming a luxury staple even the middle class can barely afford. Part of this is due to extreme weather. The heat wave last year hit crops hard. But the real issue? Policy missteps. For decades, Japan's government has paid farmers not to grow table rice in a bid to control prices and win favor with rural voters. Instead, they've subsidized the production of feed rice for livestock. Now, that long-standing strategy is backfiring. Public frustration is boiling over, directed squarely at the ruling Liberal Democratic Party. Recent polls show the approval rating of Prime Minister Shigeru Ishiba's cabinet has plunged to record lows. With a key upper house election just 2 weeks away, the ruling coalition is on shaky ground. As one Japanese voter bluntly put it, "I may not vote, but I know one thing, this government can't even keep rice on our table." And in Japan, messing with the rice bowl is a political disaster. If the LDP loses the election, political chaos could follow. The prime minister may even be forced to resign. You might be thinking, sure, but isn't this just a domestic issue for Japan? Far from it. Japan isn't just an anime or auto powerhouse. It's also one of the world's most heavily indebted nations. How much debt? Over 2.6 times its annual GDP. That's one of the highest debt ratios on the planet. So why hasn't it collapsed yet? Mainly because Japan has been able to borrow at extremely low interest rates, and the Bank of Japan, the ultimate backstop, has been buying up government bonds non-stop, keeping yields tightly suppressed. But now, the game is changing. Think about it, if political instability leads to a new government, what's the likely response? Massive stimulus to calm public frustration, more spending, more subsidies. That's when international investors will start to question, is this government still credible? Can it really repay all this debt? Once that confidence cracks, panic selling could begin. Everyone will rush to dump Japanese government bonds, treating them like a hot potato. It's like a giant dam, and Japan's bonds are the keystone. If that stone shifts, the whole thing could collapse. Because JGBs are held by pension funds, sovereign wealth funds, and institutions all over the world. If they crash, global interest rates could spike, affecting everything from corporate loans to your home mortgage. That's why many in the market believe there's a 50% chance Japan's election could trigger a global bond crisis. And we're not done yet. If bond markets crack, the yen will come under fire. Capital will flee, the currency will plunge, and domestic inflation will spiral out of control. Worse, a collapsing yen could drag down other Asian currencies, setting off a wave of competitive devaluations. And don't forget, Japan is currently in crucial trade negotiations with the US. Political instability will severely weaken Japan's bargaining power. If talks break down, a new trade war could be just around the corner. So here's how the chain reaction plays out. A rice shortage sparks public anger, leading to political instability, triggering a bond market panic, causing the yen to collapse, and ultimately setting off a global shock across bonds, currencies, and trade. For traders, big volatility means big opportunity. On Ultima Markets, in addition to US dollar to Japanese yen CFDs, you can trade the Nikkei 225, US 10-year Treasury CFDs, and other related assets linked to this unfolding event. Markets move fast. This is Ultima Markets. See you next week.